Hello traders. This video is about the preparation now for a flat correction. Okay, so we know that the flat when and where a flat correction will take place. The first important thing we need to remember is that a flat correction will take place at the end of a strong up move or at the end of a strong, okay, a bearish move. So we want to see a strong uptrend or a strong downtrend where we have 5 waves. So you see the price went up from here all the way up here. So you see the vertical move will tell you that it's very, very strong exaggeration here. We are likely to see a flat correction. So how do we prepare ourselves for a flat correction? We'll also pay attention to the global economy cycle. Here we are in 1999. This is when we have okay, the tech bubbles, and the market was at the top end. Okay, so everybody was buying like a mad trader, so to speak, and we know that we have a strong, that if a correction is about to begin, it will be, there's a high chance that that correction may be a flat correction. All right, but we are just going to prepare ourselves for this. And how do we prepare ourselves for it? Okay, so we will use our Fibonacci retracement tool. We will highlight, okay, the range of the strong move, and then we will highlight the 50%. This is our preparation for the expanded flat correction, for the flat correction, not expanded, for the flat correction. All right, so we highlight, okay, the 50% Fibonacci retracement level, and also the 61.8% Fibonacci retracement level. All we do, we are not trying to inform, we just highlight it. Okay, highlight the zone already. Okay, if the price move up more, if you draw it like this, for instance, and the price continue to go up, you will move it, you will move it, you will move it, you will move it, and adjust your highlight level to the 50% and 61.8% level. All right, you understand? So in this case, it's like I move it down, the 50% move to this level, the 61.8% move to this level. Okay, but when I'm drawing a line, I want to, you see, stop here at the closing price. I'm discounting, okay, the wick at the top. But you can try to go into the mind of other traders also like this to know what the traders are looking at. But I'm drawing mine just to the closing price, ignoring, okay, the wick here because price went down but closed somewhere here. So our zone is 50% and 61.8, which is, okay, this zone. So we have it ready. This is our preparation. We don't know what the price will do. When we see it coming down, we say this is the A corrective wave. There's a high chance it will come to this zone. Look, it came exactly there. All right, but in this case, the A has been divided into A, B, C. You may not see on this yearly chart, but this is A, B, C. All right. In normal condition, the A corrective move should be in 5 waves, like the C corrective move. So after we put our highlight at the 50 and 61.8%, the next preparation that we can do is the target zone for the B corrective move. All right. So we want to know where the B will likely end. In that case, we'll use the Fibonacci extensions. If you don't know anything about Fibonacci extensions, you need to go to www.dayprotrader.com to learn about the Fibonacci extension, or YouTube, or even on the web. Okay. Fibonacci extensions to know, because the A corrective move retraces up to the 50%. This is the A corrective move from here to here. So we will expect, because we are preparing ourselves, we don't know what will happen, we'll expect the A corrective move to come to the 50 and 61% zone. We are expecting, okay? As the price comes to this zone, so which means the price has, okay, done exactly what we are expecting it to do, we will take advantage of it. So we will expect a kind of ABC or 5 move down to this zone. Here it has been ABC. When we see this one like this, we'll take advantage of it and sell it to this level. Now we want to know where the B corrective move. So the A corrective move is from here to this level here. I'll color it also into. It's a kind of market forecast, but more about more about preparation. All right, because we know that a flat correction will usually take place after a very, very strong up move or a very, very strong down move. Okay. So now we see the A corrective move. We'll say, okay, there's a high chance we may see the B corrective move. We don't know whether we're going to have a classic flat correction, which means the price will stop somewhere here, giving us a double top or even a lower top here. But we can just, okay, do our preparation. We will say, okay, either the B will end somewhere here, which means we have either double top. This is a classic a flat correction, or we may have a lower top here. That will be a classic, okay, a flat correction. But we will also be prepared in case the price takes the starting point of the A correction. We will be thinking of a running flat correction or an expanded flat correction. But all we are doing, we are just preparing ourselves for it. If the price is doing exactly that, we'll take advantage of it. Because the price, the A, retraces to the 50 and 61.8% Fibonacci retracement zone. The Fibonacci extension that we will highlight will be the 1 to 7% Fibonacci extension level, which is the first line here, and also the 138% Fibonacci, okay, extension zone, which I'm going to color also into blue, okay. You see now, so we do this preparation and just wait, okay. In this case, you can see that the price was desperate to come near the 127, couldn't even go to the 138, which means it had this Alcoa stock, Epic Alpha AA, has been under bearish pressure big time, okay, couldn't touch the 127. That's a weakness. I will call this one instead a classic a flat correction, because it couldn't even touch the 127. Though you can see they were desperate to push it there, but they couldn't touch it. I will classify this as a classic flat correction. And then we have here the C corrective wave. At this point in time, that's all I can say. So do not be surprised if a few years later you see another red one down here. At this point in time, that's all I can say. No one knows what the price will do next, but this is what I can say here. If the fundamentals are weak, if the sector for this Alcoa is bearish, okay, it will continue to go down. Doesn't matter. It may come to total retracement to this level. The fundamentals, the news, okay, and the sector can change the dynamics of the market at any point. The technical analysis is not a magic that we can enforce or something magic one we can just okay, throw at the market and things will work exactly as we expect it. We want to be flexible and pay attention to the earnings, the balance sheet, okay, and okay, the sector, okay. So these are the preparation that we can do, okay, for okay a flat correction. I hope you have enjoyed this video also, okay, that you will put into use, okay, to make excellent, okay, decisions. We are the TSTW as well as 008 traders. Speak to you soon.